So basically, we did a quick introduction to payroll and the parent setup, edit tenant setup payroll at a very high level. And we just discussed, what are the framework configuration, which are the basic three pillars on which the Workday payroll, kind of stands, or, the basic structure, which is our pay group, period schedules, and run categories, right? So in basically in the tenant setup payroll, we and people who already have some background of Workday would know that for every module and for global settings, we have something in Workday which is known as tenant setup. Now, tenant setup, as I said, is system-wide settings that you configure, and it drives the overall, performance at a system level. So you have your tenant setup for HCM, you have similarly a tenant setup for payroll, you have tenant setup global, which has global settings, but module wise also you have tenant setups. So in tenant setup payroll, basically you can select the countries that you want to, process your payroll in Workday, right? Certain high level settings on your payslips, if you want to use, custom layout to print your payslips, a bird layout, right? How does your W2 forms would look like, from a formatting perspective, right? Retro processing, we'll definitely do, deep dive in later sessions, and I'll introduce what are retros, how are retros processed. But for now, just to understand very high level settings on retro, how do you want to process basically retro in payroll? How many years you want to go back, and so that the retro can process those kind of settings are configured at the tenant setup payroll. This is how it looks like. You select your what Workday payroll countries are there, some costing allocation setup, right? Payslip setup, some high level payroll accounting setup is there. W2, as I said, alignment override, your footer and header, how many, millimeters or centimeter you want it to get displayed. But there is another task where we do the W2 box setup. So that is totally different. So on the tenant setup payroll, for W2s, we just tell the system about the formatting and all. But there is a separate section for W2 setup. So and people new to payroll and year-end reporting kind of thing. So W2 is basically your year-end reports where you have all the details of the wages and that for which companies and how much wage you got, what were your taxable and subject wages at the year end you get on the basis of which your taxes are filed. So that is your W2. Then sequence generators, you basically so sequence generators are just for you can, especially for withholding orders and all settlements, you can create a sequence generator in Workday. So whenever you create new withholding orders or garnishments for your employees, the sequence generator automatically creates new sequence 1, 2, 3, 4. You can give the padding that if your company follows a certain digit like 001, 002, that kind of thing. So you can create sequence generators and attach those sequence generators in the tenant setup payroll. So these are some, and once we have the tenant of Monday, I can again show you how the tenant setup payroll in Workday tenant looks like and where all these settings are. But from a high level, tenant setup payroll is a system wide setting area where you give, certain settings which drives your payroll. And then you go into, deep dive payroll configurations, earnings, deductions, taxes, where you set up at the, structural level, the detail level. In this slide, basically, I created a process flow to show how a payroll is kind of processed, an end-to-end kind of process in payroll, just for just for an understanding. So you set up your payroll processing framework, which is your pay groups, period schedules, and run categories. You assign the workers to a pay group, right? So generally, I mean, that's essential that a worker needs to be attached to at least one pay group, then only their payroll can be processed. And I think that is something that all the ERPs follow, whether that's Ceridian or SAP, that worker needs to be assigned to a pay group. You create your earnings and deductions. So basically, that's form the meat of what earnings you will be getting and what deductions, you owe to the company or to the benefits partners or different agencies. So those deductions, so you configure those earnings and deductions, and then you set up company taxation. So basically so there are two setups of tax in Workday. Basically, one is at a company level, right, where you tell what is the FEIN, what is the taxation method that you'll be using. So if you have, let's say, five payroll companies in Workday, so companies from a HCM perspective and from a payroll perspective, guys, are different. You may have, let's say, 30 companies in your HCM side, but you may only be processing payroll for a certain section of people, right? So those are basically our payroll companies, and you set up the taxation and for those companies here. Then we go ahead and assign the tax elections for worker. Now, people familiar with US taxation and how the tax structure in US works. So basically, we have taxes at three different layers. We have a federal tax, we have taxes at the state level, and of course, there are taxes. There are states who do not take state taxes. So those states, of course, are there. But again, majority of the states have their state taxes as well. And then at the city and county and school district level, we have another layer of taxation. Now, if we want the payroll system to correctly deduct taxes for an employee, we need to tell the system that what tax elections a worker has, right? So we need to define at the worker level and give them the tax elections, basically your W-4 at the federal level and of course at the state and city level. In which city the employee is, kind of residing, what are their exemptions, their allowances, if they are claiming any, what are their marital status, what is the effective start date, those kind of things, so that, the taxation can happen correctly. Then you define the payment election. Payment election is the method by which the employee gets paid. That can be either through a check, you cut out a manual check, right, and hand it over to the employee. That's very much prevalent in US. Of course, when I talk to folks from UK and other countries, checks don't work there. So they just have bank account transfer. So payment elections, you are basically telling what is the mode of payment to the employee. It's a direct deposit to their banks or a check or other pay card methods. Then you assign the worker payment elections, right? So in this step, we define at a system level that okay, for my company, I'll have these three kind of payment elections which an employee can choose. Then you assign those payment election at worker level, right? So I may want my 50% of the pay to go to my Citibank and the balance to go to my Bank of America. So that kind of assignment is done at the worker level through payment elections. Then you set up your accounting, payroll accounting, which ledger or which ledgers you want different pay components hit, and at you define your eligibilities for okay, for this company, this pay component, this needs to go to this ledger. You define your ledger periods, you open the periods, those kind of things. That setup needs to be there. Once your accounting setup is done, you can go ahead and assign your workers if there are any withholding orders. So withholding orders are garnishments or involuntary reductions which are you know which come through the courts and other government agencies directly to your employer, and that employer will basically go ahead and assign those or kind of load those garnishments at the worker level so that they can be taken out every pay period. So garnishments can be anything like your bankruptcy garnishment or a child support or those kind of things. So once your garnishments are set up, you basically go ahead and make sure that your banking and settlement is fine. So banking, basically you from which bank you'll be making the payments to the worker. So basically the company's bank account needs to be set up, and then your settlement structure needs to be set up basically. Once everything is, these config steps are done, you need to make sure that whatever integrations are there, right? So integration is, basically if you are using other systems, like for an example, as Yash said, right, that for time tracking, a certain customer may not be using Workday's time tracking module. Maybe they are using Chronos, right? But you are processing payroll in Workday, and you need to know how much time an employee worked, right? Because there are a lot of hourly employees, right? So employees may punch their hours in Chronos, but since you're processing the payroll in Workday, there has to be a link between the two systems so that Workday knows how many hours an employee has worked, right? So this data flow takes place through integrations, and inbound integration is something where data is inbound. That means data comes into Workday, and if there are any integration that sends data out from Workday to a different system, let's say you are maintaining your finance system in SAP, right? So once every payroll is processed, you should have outbound integration that takes your payroll data and the ledger data to the SAP module where your finance setup is there and overall accounting setup is there. So basically, those are the integrations, high level. So this is the basic flow of how, from a configuration perspective, what things you need, and how the kind of data and the system follows a logical flow when the payroll process is concerned. And we'll deep down a deep dive in all these steps later on. We'll go into the tenant and we see how run categories are set up, period schedules are set up, pay groups are set up, how an employee can be assigned to a pay group, what are the different methods, right? We'll configure a lot of earnings and deductions, different flavors of earnings and deduction. And in this course, if time allows, and we'll also, you know, give a brief overview of earnings and deductions, right? So we touched upon the tenant setup. Now let's see this. So basically, this is our payroll processing framework. We will start our conversation from here, and I think in session one we talk in detail what are period schedules, run categories, and pay groups. So basically, these are when, what, and who of payroll. So period schedule, right? As the term suggests itself, is the schedule. So basically, it is the periods. You may be having a weekly payroll where you are paying your employees weekly. There may be bi-weekly employees. There may be semi-monthly employees. There may be monthly employees. You may even have quarterly bonus payouts, right? A semi-monthly bonus payouts. So these frequencies are basically what we call, or not frequencies, but periods are what we call period schedule in work. Now, what is a run category? Run category is basically what of payroll? What are you trying to pay? And I don't have the tenant, but in session one, we saw how the run category and different sections of run category looks like. But next session we can show you to the folks who are joining new. So basically, run category has three sections. One is an active section where you tell, okay, for what kind of employees I'm going to process my payroll. And again, this is the overarching setup, right? Your payroll system or the payroll setup basically resides below run category. So run category kind of controls what are you processing, right? So if there are any earnings and deduction that you later on see in your payroll that's not processing, and why it's not processing, basically run category is a good area to come back and see how you have done the configuration. You tell, I'll be, processing my payroll for active employees, for employees who are on leave of absence, for any terminated employees who have ongoing input, right? So input is another concept that we'll talk about what an input is, but for now, just take this thought along that input is as of course the literal name suggests, it's an input to the worker, and on the basis of what is the effective date and what is the effective start date and end date on what is the amount that input processes in each period, and either that can be an earning or a deduction, right? So we can tell, okay, process for terminated employees who have inputs. So basically, you are telling what employees should I be processing my payroll for. In the run category itself, you have a section for non-active employees, special section, a separate section, because and why that's important is because in the non-active section, you are telling if an employee is not active. Now, a not active employee can be terminated and can be on leave of absence, right? Now, your company or your client may want to process a certain deductions, certain earnings, especially for employees on leave of absence. Let's say you have a short-term disability pay, right, that you are paying to certain employees who are on short-term disability, and that's basically, a kind of leave of absence. So you need to tell the system that okay, if an employee is on a short-term disability absence, leave of absence, go ahead and process these five earnings. Similarly, there are a lot of clients who may want to process certain employer paid or deductions, right? So you have your medical premiums, right? That you pay to the vendors like 8, 9, Unum, like your medical premiums, dental premiums, vision, your accidental insurances and all. Most of them, or if not all, most of them have a employer portion attached to it. Now, in even if the employee is on unpaid leave of absence, let's say they are on a 1 year of sabbatical, right, where they are not getting paid, but they are, in present in the system, and the company knows that okay, once the sabbatical is done, they'll be returning back. Though the employee is not getting any pay, the company still wants the employer paid deductions to process, right? Where do you tell the system, right? Run category, non-active tab is the section where you are going to tell the system that okay, if the employee is on these unpaid leaves, sabbatical or long-term disability or XYZ, any leave of absence, these are the deductions that the system needs to process. So basically, that was our non-active section. Then there is a section for off cycles. Now, I think most of us have this much knowledge about payroll that you would understand what is an off cycle, but I'll still tell. So, on cycle is your regular cycle. For a weekly employee who gets a weekly check, you have your on cycles that process weekly. But let's say if you want to, pay out a bonus or pay out an ad hoc payment to an employee, and you can't wait for the next on cycle, but you need to pay, you can, of course, go ahead and do a dog cycle, and that is known as off cycle in Workday. Now, there are two types of off cycle. We'll not discuss those right now. But in later section, we'll do that. In run category itself, there is the third section where you tell how your off cycles need to be processed, what earnings, what deductions you are going to process in the off cycle. So basically, run category, as it says, is what of the payroll framework. Now, pay group is, of course, it's very common. It's basically tells who do you want to process. Now, let's say you have 20,000 employees in your company. Few of them are getting paid on a weekly schedule. Few of them are getting paid on a bi-weekly schedule. So you create pay groups, and this is purely a client or a company driven decision that how they want to segregate people. I have seen companies with just 5,000, 6,000 employees, but they wanted to segregate employees basis different companies. So even though they had just weekly schedule folks, essentially that could have the payroll could have been done through one pay group because there were all weekly and you can put all those employees in a weekly pay group, but they chose to because of the reporting requirements, they chose to break down it into 10 pay groups. So pay groups is basically who, and every employee needs to have at least one pay group. So that was our, a basic framework that we just, talked about. Now, run categories, right? So there can be two types of run category. As I said, one is a regular a run category. Basically, a non-regular run category comes into picture when you want to, and this is all my in my experience of 7-8 years in Workday Payroll. I have only seen a non-regular run categories come up when they want to process bonus separately, right? You want to process the bonus as supplemental rates, and there are only few earnings that you want to process differently. So this is slightly advanced topic for now, but I will, and once we have the overview in next couple of weeks, then we'll see how regular and non-regular run categories look like, and how they that pans out differently, so that way you'll understand it better. But for now, just take this thought along, that regular category and we have a non-regular category for run categories, and basically they are taxed differently. And non-regular category are generally for bonus payouts, if a company wants to pay bonus differently in different cycles. So this was basically a run category. All those non-active for off cycle payment elections we discussed, and we'll see on Monday or Tuesday that how payment elections looks like in Workday, and how you assign a worker payment elections, different kind of payment elections, like your direct deposits or your checks, right? Now, I think this is where we stop. And so basically we have a concept of pay run groups. This is again not widely used, I would say, but majority of the enterprise clients, right? Basically employees having more than 20, 30,000 or 40,000 people with multiple pay groups. Now, as I gave you an example of the client, right, who had broken down even a weekly pay group into 10 different pay groups, because they wanted company ABC to have its own pay group, company XYZ to have its own pay group. So basically, parent group is a concept where you can club similar kind of pay group into one. Now, why this is important? Because let's say, and I have seen clients having 50 to 60 pay groups. When you run a payroll, right, you need to mention which pay group and which pay period you want to run the payroll for. Now, if you have 50 pay groups, you have to run it 50 times. And that's a very big task, right? So pay group gives you the power. So at the same time, you can have different pay groups and have this functionality if you want to process the payrolls for different pay groups differently. But let's say if you want to, if it's a plain on cycle and there are no complications, you can just go ahead and select that one pay run group which has 20 to 30 pay groups inside it, and you can run the payroll for all those pay groups inside that pay run group at once. So it is a very simple concept. What is a parent group? It basically combines different kind of pay groups, right? And your pay frequency has to be same. They should be using the same period schedule. That is one important prerequisite. You may have different weekly or bi-weekly schedules, or let's say your dates don't align, right? You can't have same pay groups in that one pay group. So as I said, for a parent group, it's very important that your frequency and the periods are same. Okay. So, and this basically why Workday has given this feature is just to combine those pay groups. So during the payroll processing, it's easy, for the administrators to go ahead and, process payroll for multiple pay groups at a time. Next.
I just wanted to ask one thing, that if
Yeah.
the pay period date for, I mean, the pay groups is for, let's say it's for bi-weekly pay group, okay, but the
Mhm.
pay period date, pay period is different. I mean, even though it's bi-weekly, but the date of that particular pay group it's different. So whether we will run it along with the other pay groups as well.
So Ayushi, it's very important to understand that when you are running pay calculations, right? And there was, I think, in session one we saw how we run pay calc, right? So you
Mm,
have to select the period. Now, when you are saying that, okay, there may be only bi-weekly, but the periods are different, then
mm,
you will have different period schedules. So it it is driven from a period schedule. Let's say you have bi-weekly 1 and bi-weekly 2, both periods are different, so you will run
mm,
it differently. You will first run for bi-weekly 1,
mm,
then you will run for
mm,
bi-weekly 2, because you
mm.
understand that it is dates that
Yes.
are driving the payments, right?
Mm, yes, yes, yes. Understood.
Okay.
So in that scenario, we have to run it twice. I mean, for biweekly one
Yes, correct,
differently,
correct,
and then for biweekly two. Okay,
correct,
got it.
correct, correct, correct.
Thank you.
That's why when you are, and that's majorly for consultants, when you're going through the design sessions and requirement gathering, it is
Mm-hmm.
important, to understand from your client how they are, currently processing and if there is a scope of optimization, right?
Mm-hmm.
Because that's really important because you
Mm-hmm.
need to make the payroll processing easy and smooth, because that is not a job that you do once in a while. You have to run a payroll every week, every other week, right? So
Mm.
that's important.
Okay,
So
thank
we were discussing the parent groups, and in there's another concept which is known as pay group auto assignment. Now we learned that for an employee's payroll to process, it is important that the employee is attached to a particular pay group. So to ease the assignment, what Workday has come up with are known as automatic pay group assignment rules. So basically, these are conditions which you can just create in Workday and say, let's say, if a employee is in ABC company and they are hourly, let's say, that is your one condition, and then you can attach that pay group auto assignment condition to a pay group. So what happens when an employee is hired, right? And we attach this auto assignment, basically the pay group assignment BP is attached as a sub process in a higher BP. So when you are basically your HCM or your HR is initiating a higher business process, you'll have multiple steps, right? You'll have where you will give what organization that employee belongs to, what cost center that employee belongs to, what will be the compensation plans, what will be their compensation look like. Then there is a sub process of a pay group. When that pay group sub process is triggered, Workday looks out for if there are any auto assignment rules configured into the system, and whenever it finds a suitable assignment rule and if the eligibility criteria is met, it automatically kind of assigns that pay group to that employee. All right. So this makes a life of a payroll administrator very easy, that you don't have to go and manually assign pay groups to employees or do EIB data loads to mass assign pay groups to employees. So whenever a person is hired, your pay group assignment rules kicks in, and it as auto assigns the pay groups to the employees. Now you can have multiple pay group assignment rules depending on how many pay groups you have. If a customer has only one pay group, then basically you can just give very normal eligibility. Let's say they have two companies, right? So an employee belonging to any of the company, you attach that pay group assignment rule to your weekly or bi-weekly pay group, and whenever a new person is hired, they will be either part of the one company of the two. That pay group assignment rule eligibility will be true, and the employee will be auto attached to that bi-weekly pay group. Make sense?
Okay, I have a question. Let's say we have only two companies, but can they have like a multiple pay groups, like a bi-weekly, monthly, hourly,
Yeah, yeah, yeah.
semi-monthly?
Absolutely, absolutely. So then even if they have a one company, right? Let's say in one company you have
Mm-hmm.
1,000 employees, but 400 of them are getting a weekly pay group, right? They are getting paid weekly. They are weekly workers. and the rest are bi-weekly, right?
Yeah.
So then you need to differentiate another level, right? Then you may have some identifier at the HCM level. Maybe the pay rate is hourly. Hourly folks are getting paid at weekly. So you need to put another eligibility. You need to check the pay rate of the employees. There may be classification on the job family, a certain job family. So this is all discussion that happens therein during your requirement gathering. So these are basically, I mean, mutually exclusive groups, right? An employee cannot be eligible for more than two pay groups. Otherwise, your pay group assignment rules will not function properly. So that's mutually exclusive relationship that's there. So at a time, so when you are building your pay group assignment rules, it is very important that you make sure that you are, catering to all the scenarios. You are putting in all the eligibility and the conditions so that an employee falls in either of the pay groups. Understood? Because if the system finds that okay, my two conditions are true for this employee, it will not, understand and arbitrarily it will attach any of the pay group. Make sense?
Sure, makes sense. So in that scenario too, it'll automatically assign the pay groups.
Yes, it will. So it basically, when you do a higher BP, it gets auto populated, but you still
Okay,
have
auto
an
populator.
option to
Okay,
override.
got it.
Yeah,
Right. So whether you're
yeah,
an hourly employee or like a full-time permanent bi-weekly or things like that, based on that, it'll assign it automatically.
correct. Absolutely.
Okay, got it. Thank you.
All right, folks. So, and this is how a pay group assignment rule looks like. You see, so we have created a pay group rule for US administrative regional biweekly, and these are the conditions that we have checked. So the primary work address country should be US, the job profile of the employee should be any of these three, or the position is this one. So basis this rule check, if all these conditions are true and this assignment rules kicks in, the pay group to which this assignment rule is tagged, that pay group will be assigned to the employee. Okay, so there are two steps. Step one, you define or you create your automatic assignment rule, and in step two, to that pay group, you go ahead and attach or assign this pay group assignment rule. So that way the system would know that okay, once this assignment rule is true, I need to attach or assign this pay group to the employee. Okay. And these are the sub processes where assigned pay group BP is kind of part of a sub process. There can be higher or a job chain, edit position. So these are, so wherever your assigned pay group business process is a part of any another business process, or basically it's a sub process, there you will have that option to either assign change the pay group, or for those auto assignment rules to kick in. Any questions, guys? So this was basically what we covered in session one, and some additional topics around pay group assignment rules and pay run groups. Any questions?
Ajay, I just want to ask about the page that you are in, the sub process of a staffing transition. What is this exactly? If you could repeat this,
So
please.
yeah, so basically assign pay group is a BP. Okay,
Correct.
you can manually trigger this BP as a standalone BP, right? You can just type in Workday assign pay group for worker, and you can select a worker, which pay group you want to assign, what is the effective start date, and you can tell, you can just basically go ahead and assign the pay group. But
Correct.
you can also define this assigned pay group as a sub process in other
In a
business
business process.
processes.
Okay, got it.
Got
So
it?
in hire or say change assign organization business process,
Mhm.
we can have an assign pay group sub process step.
Exactly.
Got it.
Correct.
Thank
And
you.
so the important aspect about is we just touched upon the pay group assignment rules, right?
Mhm.
For those to kick in, your assigned pay group should be a sub process,
Yeah.
all right? Otherwise, it won't kick in. So, and you'll have to manually go ahead and assign the pay groups.
Yeah. Perfect. We
Right.
can also do an EIB update, upload,
Yes.
EIB load
Yes.
for
Yes.
assigned pay.
We can. Yeah, definitely we can. But that's more from a conversion perspective when we are, building the tenant for the first time.
Mhm.
Or if there are, mass hires or, you just, but why to, go that route when you have all these functionalities in the front end? Of course, EIBs you can do, but that's more technical, right? A lot of clients do not want to go ahead and do the EIB thing because they fear that, Excel or those things.
Mm-hmm.
And
Yeah.
that's definitely, we will see how the pay group assignment EIB looks like in later chapters. But yeah, you're right. Yes, that's another method of doing assignments. All right, folks.
Because I work with Peacock and Pechi integration, right? There, when we create a pay group, we also create a custom organization for a payroll company. Do we do it when we process the whole thing on with
That's you now. You are basically telling from your
experience? Yeah.
your experience.
Hmm.
Now, where you were, they were not using payroll in Workday,
Yes.
right? So
Yeah.
they had what is called payroll interface.
Correct.
When you use a payroll interface, there you make those custom orgs,
Okay.
which are basically known as external payroll companies,
Correct.
right? And then you need to attach those external payroll companies to pay
For the
groups,
pay
and via
group.
that pay group, that is
Yes.
assigned to the employees. So
Yes.
here, when you are processing Workday payroll in Workday, you don't need that setup
Okay. Perfect.
because you have your payroll companies, right?
Got it. Okay. Thank you. Because I had
Yeah.
one of those
So
steps and I was trying to see if that came up.
yeah, no, that's definitely, and that's peculiar to interface. So, guys, interface is, as Yash mentioned, right? There are clients who may not be using Workday for its payroll processing, but let's say Workday is system of truth for their HCM records, or comp is residing in Workday, or so and let's say a worker is when worker logins into Workday, they see their pay slips in Workday. So now, even if you are processing payroll outside of Workday, you need to bring in that data, the earnings, deductions, and everything inside Workday. For that, we create what's called as external earnings and deductions. It's basically a basic skeleton of earnings, and you basically just, so it's a placeholder for integration mapping. So you're telling from ABC ERP, pull the regular hourly earning and just map it to this external earning in Workday. And then you also create external pay group, pay companies and all, external payroll companies, external pay groups. So this is known as external payroll configuration, and that's done when you are not using Workday for payroll, but you are using Workday for other modules, and it is the system of truth for your records. So that's one concept that most people are unaware, or basically we don't discuss. But yeah, thanks Yash for bringing that up.
Yeah. Yeah.
So with that, we kind of finish our payroll processing review, and the tenant configuration is pending. So once the tenant is up next week, we'll see how those things are configured. But from a theoretical concepts, we are moreover, we now know what is a run category, what is a run schedule, what is a pay group, what is a pay group assignment rule, and how those things kind of binds together. Understand what are earnings and deductions in Workday. And so here, of course, see, this is a very vast topic because it sounds okay. We are just learning what is earning and deduction, and basically most of us would already know what is an earning and deduction. But trust me, this session can go on for hours because there are so many flavors of earnings and deductions, right? And then there is a lot of peculiarity that seeps down, which different types of earning, different types of deduction, different you know type of clients from different sectors. A healthcare client may have different kind of earnings and deduction setup. A manufacturing client will have a totally different setup. They'll have those unions and those job, basically your union membership, so the employee has to pay certain amounts to the union, so those union deductions are there. So it becomes really vast when you start discussing those things. And motive is not just to, learn that, okay, what is an earning, what is a deduction, but we'll see what are different types of earnings. How does it look in the tenant? What are different elements that, are important for the configuration of those earnings? But here in this PPT, I'm just going to give you a high level overview from a theoretical perspective, and then we later go into the tenant to see how those things are configured and different things. So again, we'll see what are the overview and overview of earnings and deductions. So earnings and deductions basically are referred to as pay components in Workday. Okay, a lot of ERPs have different terminologies, but in Workday we use the terminology of pay component. So in your certifications or when you're doing your, looking out for any questions and all, if you see pay component term, it basically means earnings and deductions, right? And these are basically configured so that you can pay your employees, correctly, because that is what actually drives what your employee, what the worker is getting paid. So process that the framework process that we earlier touched upon, basically that kind of is overall pillar of how payroll should be processed, when payroll should be processed, for whom the payroll should be processed. But in payroll, what you are processing, that's your earnings and deductions and taxes. Taxes are of course different. We'll talk about separately. So you can configure earnings and deductions to specify which workers are eligible, you know, how that earning is going to process, what is the proration. Now, what's a proration? Proration is basically, let's say if there is an event, an employee goes on a leave, or in a mid pay period, let's say it's a bi-weekly or it's a weekly pay period, let's say Monday to Friday working days, and the employee goes on a leave of absence on Wednesday, or the employee gets terminated on Wednesday. Of course, you're not going to pay him to pay for the entire week, right? You need to prorate their pay on the basis of either the number of days that employee has worked, or number of calendar days, or you may have your own custom calculation to determine how you prorate the pay of the employee. But from a concept perspective, you prorate the pay of the employee and pay for the days that he has been active for, or for the days he has actually worked. So that configuration is done at the earning level. Whether do you want to prorate, or you do, if you do want to prorate, how do you want to prorate? If you want to prorate on actual days work, on calendar days work, or your custom formula, that is done at the earning and deduction level. Now there are a lot of, and this is basically true for all the benefits related deductions, like your medical premiums, dental, your insurance premiums. Basically, I have not seen any client prorate your premiums. Why? Because from a logical perspective, that even if you're active for one day in a pay period, you have to pay your premiums, right? It doesn't matter how many days in a pay period you have worked, your premiums need to go to the vendor to keep your, insurance up to date. So in those kind of circumstances or those kind of situations, you do not prorate the deductions, or there may be certain earnings that you don't want to prorate. So when you do your design sessions, or when you gather the requirements from your client, we generally ask that which pay components they want to prorate, how they want to prorate, things like that. So that was the basic concept of proration. Then there are gross up earnings. Now, what is a gross up earning? Anybody wants to take a hit at it?
It's a gross up is when, for instance, you want to give, let's say you want to give an employee a $500 bonus and you want them to get the $500. So you would gross it up so that the taxes that were due for that employee would be paid by the company.
Absolutely, bang on. I mentioned, so there are certain bonuses, or some payments. Let's say Hiren was an outperformer, star performer for the month, and his company decided to pay him a bonus of $5,000. So, and company wants Dhiren to get the full $5,000, right? Dhiren shouldn't be surprised that, oh, my company gave me $5,000, but the government took away $1,000. I'm just left with $4,000. So in that case, what a company, or from a configuration standpoint, what we do is we tell the system that, okay, pay this earning in a way that even after the taxes are deducted, Dhiren gets a net amount of $5,000. Okay. So basically, these are gross up earnings. And we'll see how we set up those gross up earnings in the tenant next week. But when those gross up earnings will process on your paycheck, right? Let's say the earning code is award, right? Bonus award. Now, against bonus award, you will not see $5,000. You will see 5,850, or $6,000. But the extra portion is getting deducted as taxes. So companies actually even paying for your part of the taxes, so that after the taxes are taken care of, you get a net amount of $5,000 for your award. So that is a gross up earning. Is it clear? Anybody has any doubt?
It's like offsetting taxes for a particular payment, right?
Yes, correct. Okay. So that was your gross up. Now, there may be certain earnings and deductions that you want to only take out in certain periods. Generally, the way earnings and deductions are configured, you take out every pay period. You don't restrict a earning or a deduction that, okay, just pay this should process only in certain pay periods. But let's say you have a deduction. Let's say you have a union deduction that employee is paying $2 to a certain union, but the employee only pays once in a month, right? Or let's say every second pay period of a month. So there is a custom schedule to it. You are basically overriding, or telling the system that, okay, wait, you do not need to process the way you have been processing, that is every pay period, but for this deduction the employee needs to pay the deduction, or employee needs to get a car allowance every second pay period of the month. So that is a custom scheduling that we do at the earning or deduction level. So that basically gives you control when you want to process that earning or deduction. Then retro calculations, of course. Retro is something that a lot of people are very afraid of, and they should be afraid of, because if retro, I mean, it's, I think, unnecessarily complicated in a lot of people's mind. But the retro is basically if you missed paying an employee certain earnings, or you missed taking out any deduction, or there were missed punches, or there were time offs, or basically anything that should have been done previously, but due to some system issues or some manual errors, it was not done, and you are paying it now to cater to what should have been earlier paid. That's known as retro. Now, if particular earning or deduction should process in a retro, is controlled at the earning and deduction level. So there is a small checkbox which is called as do not recalculate during retro. You check it or you don't check it. That drives whether that earning or that deduction will resolve when there is a retro event for that earning. So let's say if at a earning level you are not saying that, okay, this earning should be processed in a retro, and you are giving a pay input 2 months back, thinking that, okay, this was something that employee had missed, and now I'm giving, so this should pick up in retro. But at the earning level, you have not configured the earning to retro, it will not, right? So the retro setup, basically, if the earning or deduction needs to resolve, is driven from the earning level. FLSA, right? Now, FLSA is, your Fair Labor Standard Act, and it basically drives the way your overtime premiums are paid, the rate at which your overtime are paid, right? And it's concept in itself, and we will see, because I know there will be a lot of people who don't understand how a retro calculation is done, and it's my responsibility to make you understand, right? First, what is FLSA and what is FLSA, and how the FLSA periods and things are calculated, your FLSA wages and FLSA rate. is calculated in Workday, and how your overtime earnings get paid on the FLSA rate. So we'll see that in later sections. But if an earning should resolve in FLSA period or not, that is also configured at the employee level, the earning level. Okay. Now, tax resolution for multiple districts. So this is another, tax concept. Multiple jurisdictions basically refer to, let's say you have an employee who keeps on traveling between two states, right? So he half of the time he's working in, let's say, Pennsylvania, and half of the time he's working in Washington. So basically, we do a kind of tax allocation, and we tell, okay, 50% of the earnings should be subject to Pennsylvania, and 50% of the earnings should be subject to different state. Now that whether that your earnings or the related calculations of earnings need to be break out on the basis of multiple jurisdictions, that is also controlled at the earning level. And we have a checkbox, again, do not split on a multi jurisdiction. That is also a checkbox on a earning level, which drives that functionality. And then we will see on Monday how that looks like. But the split when there is a multiple jurisdiction thing, that is also controlled. So let's say that you have an employee that you have set up a tax allocation, that 50% allocation is in Pennsylvania, 50% in Washington. But when you see the pay result as a payroll admin, you don't you see all 40 hours to Pennsylvania, right? Or the hours are not splitting between Pennsylvania and Washington. You need to come here to see that how you have configured that earning and whether that checkbox is on or not. Okay. Applicable limits. So we have certain earning, let's say a tuition earning, right? So tuition, a lot of employees have a reimbursement policy for tuition, and how that works is up to $5,250, whatever reimbursement you are getting from your company is non-taxable, right? Anything above 5250 is taxable, right? So there is a limit. Now, when you configure your non-taxable earning, so this is again a slightly advanced topic, but just for the idea perspective I'm giving you, for a non-taxable earning tuition, you will give a limit. Okay, this should only process till my year to date contribution or whatever I'm receiving is less than 5250. Once 5250 reaches and exceeds, my taxable earnings should kick in. So basic, and of course you have your 401k deductions, right, where you have your IRS limits of 23,500, and then you have your employee plus employer limits, and there may be other custom limits that at a company level you are using. Let's say you are having a earning, but you only limit that an employee cannot get more than $1,000 in a full year. Now, how you control and how you tell the system that okay, this process this earning only till $1,000. As soon an employee reaches or exceeds $1,000, this earning should stop. So that is done with the configuration of limits. And this is also done at the earning level. There is a separate section where you configure the limits. And we'll see in later sections how limits are configured. So just remember that in this slide, we are just seeing or we're just getting an idea of what are different configuration or the controls that we set up at earnings and deductions. Effective date resolution. From what effective date the earning or deduction should start. So you give a date or effective date to the earning, that is known as the effective date. Benefit plan application. If anything is coming from a benefit plan, and this is specifically true for benefit deductions or any earnings where your data is coming from benefits. So you attach your benefit plans to the earnings or deductions, and your premiums and your 401k percentage, your health saving account deductions all flow through benefits. And this is only true if you're using benefits module in Workday. If you're not using benefits module in Workday, you might have different integrations sending those, benefits data, those premiums or 401k percentage and all. If you want to exclude pay component from forward accrual. Now, forward accrual is a accounting step, and that's done when your pay periods span across multiple counting periods. So you in this will see when we look at, because this is configured at period schedule. And I think someone had the question around how forward accruals are calculated and what's actually forward accrual means. So we'll see when we configure periods schedules. But whether earning or deduction should exclude from forward accrual, we control it at the earning and deduction level itself. Okay. So that is another important configuration that we, which run categories and pay groups can use the pay component. Of course, if you want to restrict an earning that, okay, this only this pay group or only this period schedule, this run category can use it. We have that option on the earning and deduction level itself. And of course, in the non-effective date, effective dated tab, we tell which all pay component groups this earning on this deduction should contribute. So basically, component group is nothing but a bucket. So you can create a PCG and say that, okay, these 10 earnings contribute to this PCG, right? We call it PCG. It's basically pay component group. It's nothing but it sums your earnings and deduction. So at the earning level, you can tell, okay, this earning goes to these PCGs. And we'll see how there are Workday delivered tax PCGs which we attach to earnings, and that drives the taxation for those. So basically, for the PCGs also, we attach it to the earning and deduction level.
So I have one question. I know we talked about retro. Let's say if you overpay an employee, how do you recover that payment?
So then let's say you overpaid $100, right? And now you realize, oh my God, in April I overpaid the employee $100. The way you can basically recover is recover from the current cycle. Let's say in the current cycle that employee is getting $1,000, you recover those $100, and now the employee will only get $900, right? Any recovery, let's say if that employee is terminated, or that employee is not even in the system or not getting paid, that recovery has to be done outside of system. So the retro recovery can only be done till the point the employee is present in the system. And that's
Is there like any like a special setup you need to do, like a pay group to like recover the payment, or
yes. So there are two options to it. One is in when you're into a current online on cycle, right? Let's say it's open. It's a June first week cycle, right? We are on 6th for me, 5th for you. You're still in the first week. So you have not closed the first week of the payroll, let's say, for example. And you realize that, okay, there were $100 that were overpaid in last pay period. You can give a pay input of -100, a recovery, and that will offset in the current on cycle itself. Okay. There is another option. You can give a retro effective dated April pay input, process the retro, and this then we will touch when we see how retro works. Okay. But there is another way of doing this through retro. Now you are telling the system that, okay, there should have been a pay input or a punch or anything with a date of April. You put that date in Workday as pay input for April. When you process retro, the retro engine in Workday runs and tries to identify if there is anything with the previous effective date that has come in recently. In that run or in that engine calculation, this input of yours will get picked up. That, okay, for in employee James, $100 pay input has been entered, but the effective date was supposed to be April. So that has now, and Workday will know that, okay, this is a new pay input. This was not already paid in last month or last pay period. So when you run retro, you will see how many retros are there in your current system, and this you will see your $100. Now you can run that retro, process that retro, and when you accept that retro will automatically flow into your on cycle. So in option A, you manually gave a pay input of $100 in the on cycle itself, right? But in option 2, you gave a pay input with a April effective date. You ran the retro, and retro will automatically send. You can either pay it as a off cycle, or you can let the retro send that amount to the current on cycle that is open, and in that it will get balanced out. Of course, if there is only a negative payment, you can't do a negative payment, right? In Workday, you can't say go ahead to Workday that go and take the $100 from employee. That's not possible. But the offsetting will happen in the on cycle itself. Understood?
I understood a little bit. I would have to see, actually. I'm a
Yeah,
little bit
yeah,
confused
we will
still.
see. We will see. But
Yeah.
to answer your question, yes, you have that ability to adjust the retros or offset the retros.
Okay.
Okay.
How far can we go on retro calculation?
So that's determined at your tenant setup, Yash. And basically, there is a concept of no retro prior to processing. So, and we'll know more about this when we read the retro chapter. Basically, it's called as NRPTT or NRPPT date, and that is the date beyond which Workday cannot go.
Got it. Okay.
Okay. You can tell it can be 2 years and generally, right, when you are going live in Workday, that NRPPT date is set up as your go live date. So when you're going live, you cannot tell the system that, okay, I'm going live in, let's say, January 2026, but I'm giving a retro of 2024 or 2025. Workday won't know that
Got it.
because Workday sets the no retro prior to processing date as the go live date. And as you move forward, of course, you can, as you move to the next pay period, right? Let's say you went live in January and now let's say it was a monthly pay group. Now you have closed the January and now you are into February. If there are any inputs from January payroll, that will of course flow as a retro in your Feb.
Correct.
Because now you're already gone live with one payroll in Workday, and now Workday kind of knows that, okay. But anything beyond your first payroll in Workday, that's not possible.
Say we went live in Jan, right? And say we are right now currently in May processing. There is a retro
6 months.
amount that we forgot to pay for an employee, maybe an allowance or something like that in Jan. I think there is a system. It doesn't support you going and updating something that far in Jan, but even if it did for whatever reason,
So
I
there
don't think
are
so it can go that far and run retro, right?
from January,
Yeah.
it can. It
You
can.
can? Okay.
Yeah. So you can tell the system that, okay, go till only 6 months, go to 2 months, 2 years. So if you are telling the system that go till 2 years, even if you are in, let's say, 2028, and you've put something for 2 years, it'll go back and retro that thing for you. But generally clients don't do retro to that extent, right? 6 months or probably a year.
Okay.
But the point is, we shouldn't forget that when you are doing the retro, you are paying the employee in the current on cycle, right? So that doesn't trigger your, I mean, as far as I'm aware, the taxation part is on your current payment basis because you get correct. Although that's a retro, but you're getting paid in the current paycheck.
Got it. Okay.
All right.
One more concept that I wanted to check. I'm not sure if this is right or not. There must be some residential tax as well, right? Based on, say, for example, you're working in New York, but you are
Yeah,
staying in New
correct, correct, correct,
Jersey
correct.
or something like that.
Yeah. So we have taxation at two levels, and a lot of ERPs like PeopleSoft don't support it. But in Workday, if you are working in a different state, living in a different state, or even if you are in the same state but living in a different city, working in a different city, it's known as a work and a resident. So you have your work taxes separately, resident taxes separately. Provided, yes, you are giving proper tax elections. All right, worker tax elections are important, and you need to give proper tax elections at the worker level. Then only Workday will know that, okay, this employee is living in this city but working in this city.
Mm-hmm.
At state, till state it can know from your address. Even if you don't put a tax selection, from your address and everything, it will know that okay, this is the work state, this is the resident state. But the Workday will take out taxes at the highest slabs. But it will take out. But if you don't put it a city, county, and a school district tax selection for work and resident, it will not take out any taxes. So there is, yes, to answer your question, there is different taxes for resident and work, and that's again there's a concept of reciprocity that comes in, and that's totally Workday owned. That a lot of states have, or a lot of counties and cities, and Gina, correct me if I'm wrong, have tax treaties among themselves. So if a person is living in a X state, working in a B state, only A state taxes would come out, and that totally depends on what is the tax treaty between the two states or two cities. Right? That's known as a reciprocity concept in Workday. And that's basically a compliance thing, and Workday keeps on updating it. So, from a tax standpoint, guys, I'll just, since we're talking about taxes, there are just two major things that we do. We set up, and of course, when we started, we learned that we define taxes at company level, right, where we are telling FEINs and giving tax high level tax details, and there is a worker tax setup. Now under worker tax setup, there are again, you need to first do a company state tax setup, that okay, for this company, this ABC company works in 5 states, and I want to take out these taxes, right? So that is known as company state and local tax reporting. So you are doing a company state and local tax setup, and then you are doing a worker tax selection. I don't want to confuse you. We'll see this in detail, but since we were discussing about taxes, and of course taxes are always interesting, just wanted to leave you with this thought. Don't get overwhelmed. We'll talk about it later. Anything else? Anyone?
When we create pay group assignment rule, are we creating this to default values for that employee like pay scale, group and level? So I did not understand properly.
So
Like,
pay scale and everything, Bhagya, you are right. That defaults, right? How
yeah.
does that default? System somewhere would know at compensation level that okay, if this employee is this company or this thing, basically on the eligibility, it defaults, correct? If
Yeah.
defaults your what should be your pay scale and things like that. Similarly, in payroll, when you define the pay group assignment rules, right? When you define these rules,
Okay.
and you assign pay group. So assign pay group is a business process. All right.
Okay.
When you assign this business process as a sub process in a higher or any other business process, you understand? So
Mm.
any BP can also become as a sub process in a different BP. So you can run this business process as a standalone, all right,
Mhm.
Bhagya, but you
Mm.
can put this assigned, let's say you are hiring an employee, okay, your HR manager is hiring an employee. Now imagine your HR manager would not want to run multiple BPs, right?
Mm.
That first they hire, then they again run another BP for compensation assignments, then they run another BP for their tax selections, then another BP for your widow if there are to assign the pay group, right? So what we do is in the main BP itself, we attach these sub BPs or smaller BPs, and these are known as sub processes. So in a similar way, we'll assign the assigned pay group business process as a sub process in hire or job change or any other BP. So when that HR manager is hiring an employee, right, to a higher BP, when she comes to the step where your assigned BP is there, what Workday will do is Workday will see that okay, I have this three pay group assignment rules that are created in my tenant. Let me see which one is true for this employee. So it finds that okay, this employee meets all these criteria mentioned for this pay group assignment rule. All right. So according to the system, employee should be attached to the pay group which is attached, which has this pay group assignment rule. Got it?
Okay. So it's something like a template which you are using.
Yeah, template. It's more of a eligibility. Okay.
Yeah, we can use it for
Right?
multiple employees.
Absolutely. Absolutely.
Okay.
Okay. So
Yeah.
when they when the manager comes to the assign pay group step,
Mm.
similar in a similar way where your pay scale and pay rate were auto populated, your pay group will also be auto populated basis these pay group assignment rules.
Okay.
Okay. And of
Yeah.
course, you would have an option to override. Okay, let's say I don't want to go ahead with this pay group, assign a different pay group. You have that option, but system will default a pay group basic on the basis of the which pay group assignment rule that employee falls into. All right.
Okay. So we have
And
an
I'll show.
option there to override that. Like,
Yeah,
okay.
correct, correct. I'll show you how a pay group assignment rule, this eligibility looks like, and how we attach it to a business process, the higher business process. Okay,
Okay. So I have one more question. Like you
please go
said,
ahead.
we have pay groups, run categories like regular, non-regular, and
Uh-huh.
off cycle, right? So
Yeah,
when we are talking about bonus, so bonus is coming under non-regular or off cycle. So like in both, can we run bonus
that
in both?
yes, that totally depends, and that's totally a client-driven requirement, Bhavya. Okay, I have seen clients who process bonus with their on-cycle only.
Yeah.
There is like I'm getting a my on-cycle check for June. Let's say I'm a monthly employee. I get a check for June, and in the same check with my normal salary, I'll get some bonus. All right.
Yeah. Yeah.
So that is basically you kind of not mentioning that okay, process it in an off cycle. But if you want to process it in an off cycle or or something differently, you need to tell the system on the run category.
Okay.
Okay. So
Yeah,
yes,
the
it
same
can be
like
processed.
SAP, I think. There also like we have two options. We can run in regular
Ah,
run and off cycle.
correct.
Okay.
In our company, we have a annual bonus pay cycle, which is totally different. So they only kicks in like once a year.
So
So
to do that, therein you and of course you will be taxing it at a supplemental rate, right? Not at normal rate. So it will probably tax at
correct.
32% or something like that. So
Correct.
that you create a separate run category.
Yeah.
Okay. If a company wants to pay bonus, let's say only once in a year or once in a quarter at a supplemental rate
Mhm.
and cater to it differently. I mean, differently from the on cycle, what they do is first you create period schedule which will just have one period for each. So for 2025, it will have one period. For 2026, it will have one period. 2027, it will have one period. And then you need a run category for your bonus payment. On that run category, you will only pay that bonus earning and add supplemental rate.
Correct.
Okay. Yep.
Correct.
Anything else, guys?
So do we also see benefit setup in our course?
Benefit setup. So that's covered under benefits, but we'll see how at earning and deduction level we attach the benefit plans. But benefit configuration we'll not see. That's a
Okay.
different module.
Okay.
Yeah. All right, folks.